Let's zoom out. Owning your home outright is one of the few ways to dramatically reduce your fixed monthly income expenses for life. When the mortgage is gone, you're no longer tied to a job just to pay for shelter. That gives you freedom to pivot, downshift, or pursue something you're passionate about. Even if it doesn't pay six figures, financial independence starts with reducing obligations. And here's another angle. Equity is power. When your home is paid off, you can leverage it for opportunities like real estate investing, starting a business, or helping your kids with college, all without being burdened by monthly payments. Home equity becomes your war chest, not a ball and chain. Plus, there's a psychological weight here. Studies show that debt, especially long-term debt, causes anxiety, sleep issues, and even depression. When you kill your mortgage, you don't just lighten your wallet, you lighten your soul. Ask any homeowner who's burned their mortgage papers. They'll tell you it's like taking off a backpack filled with bricks. Before we dive into the meat, understand this. You're not doing this overnight. This goal isn't to sacrifice your lifestyle to be debt-free tomorrow. The goal is to build a system, a set of habits and financial decisions that make early payoff inevitable over time. These 7 strategies are tools in your toolbox. Use what fits. These strategies work together like gears in a machine. Start with bi-weekly payments to create steady momentum. Add in lump sums when you can and reroute wasteful spending into productive payments. If you're already managing other debts, stack them intelligently. If you're savvy and have cash flow, add the HELOC rocket fuel. Finally, this isn't just about financial math. This is about identity. Becoming someone who destroys debt early requires shifting how you view money. You're no longer a passive bill payer. You're a wealth builder, a legacy thinker, and someone who doesn't wait 30 years to enjoy the fruit of homeownership. Bi-weekly payments trick your mortgage into submission, but without disrupting your day-to-day life. That's why this is one of the first and easiest strategies to start with. It's psychologically easier too. Smaller, more frequent payments feel less painful than one big chunk once a month. Most banks don't advertise this because it means they make less money off of you, but nearly every lender will allow it. Some even let you auto-enroll. Just ask if they have a bi-weekly payment option tied to principal reduction. If not, you can still DIY it by sending in half payments yourself every 2 weeks and making them principal only. Want to supercharge it? Combine bi-weekly payments with rounding up your payment. If your mortgage is $20,050 a month, round up and pay $1,050 bi-weekly. That extra $50 every 2 weeks adds another full payment annually, meaning 2 extra payments a year total, doubling your interest savings and time shaved off the loan. Let's be clear, lump sum payments are your secret weapon. They're flexible, powerful, and easy to execute. The earlier in your mortgage you apply them, the more compound interest savings you gain. It's a front-loaded magic. 1,000 lump sum in year 2 can save you more interest than a 5,000 lump sum in year 20. Use life events to your advantage. Got a tax refund? Throw it at the principal. Inherited a few $1,000s? Same deal. Caught out a vacation this year. That money can buy you years of future vacation by ending your mortgage early. Every windfall becomes a weapon. Here's a tip that 90% of people miss. If you make a large lump sum payment, follow it up with a recast, which we'll discuss in the next section, or just continue making the original higher monthly payment. That way you turn a one-time boost into permanent progress without inflating your lifestyle. Recasting is one of the best kept secrets in real estate finance. Most people don't even know it exists. After making a big payment toward your principal, a recast recalculates your monthly payment based on the new lower loan balance without touching your interest rate or extending your loan term. The biggest win here is flexibility. Say you throw $20,000 at your mortgage and then reduce your monthly bill by $150 to $300. You can now take that lower payment and either bank the savings for emergencies or keep paying the old amount and crush your mortgage faster than ever. Refinancing, on the other hand, restarts your amortization and often comes with fees, closing costs, and credit pulls. Recasting is cheaper, faster, and doesn't require you to qualify all over again. Just note, not all loans allow it, like FHA and VA generally don't allow it. So check with your lender early on. Here's the honest truth. You don't need a 6-figure salary to pay off your mortgage early. You just need a second stream of purpose-driven income. That's where side hustles come in. And the beauty, you don't need to scale a business. You just need consistent small wins. Let's say you tutor English online twice a week for $25 an hour. That's $200 a month. Deliver food on the weekends, add another $300. Sell stuff you don't use anymore. Boom, another $100 a month. For a few months, that's over $600 a month in a new mortgage-destroying firepower. But here's where it gets better. Commit 100% of your side hustle income only to your mortgage and don't absorb it into your lifestyle. Don't touch it, just track it, automate, and attack your loan. That separation of income is what gives the strategy power. Look, you're probably bleeding money and you don't even know it. The average family wastes over $200 a month on forgotten subscriptions, takeout, and impulse buys. Multiply that by 12 months and you're looking at $2,400 a year, enough to knock off a full mortgage payment or even more. Use tools like Mint, YNAB, you don't need a budget, or Monarch Money to track every cent. When you see where your money is actually going, you'll realize you've got more than enough to redirect to your mortgage. You're not broke, you're just unorganized. Want to make it stick? Create a monthly mortgage kill line item in your budget. Physically move that money to a separate account each paycheck. Gamify it. Celebrate your principal milestones. Give your money a purpose and watch your results multiply. That stacking, also called the avalanche or snowball method, depending on the order you attack, works because it gives you momentum, and momentum beats motivation every time. Once you knock out one debt, you build belief, and belief is rocket fuel. Start with either the smallest balance, snowball, or the highest interest rate, avalanche. Mathematically, avalanche wins, but emotionally, snowball keeps people in the fight longer. You pick. The key is to knock out one loan, then roll its payment into the next. And of course, just repeat that process. By the time you get to your mortgage, you'll already be used to making huge monthly payments. That's why it works. You built the habit, you've created discipline. That stacking turns your past payments into future freedom. It's debt destruction with a strategy. Here's the truth. Most people don't fail because of money. They fail because of a mindset. They believe mortgages are forever. That 30 years is normal. That debt is just part of life. It's not. It's just what's been sold to you. You need to believe that your house, your actual home, belongs to you. That you don't need to spend half your life paying interest to a bank to have a roof over your head. You have the tools now. You just need to execute. So what's your next step? Pick one of these strategies and start today and be consistent. And that's it. Don't wait until next year. Don't wait for a raise. Take one action, create your mortgage kill plan, and let compounding decisions do the work. You'll look up one day and the bank will be out of your life for good. Thanks for watching.